Have you ever got advice from someone at the office, the water cooler, maybe even a spouse, on how you should change your TSP and what allocations should you make? And then you got the question, should I make those changes or not? How do you best answer that? What are the best allocations for you? Well, stay tuned in this first federal fact check as we go through some concepts that you should be thinking about when you're talking about how to use your TSP, especially when we're planning for retirement. Today we have a question from Rudy, and it's kind of one that I see very frequently. And his question comes in and says, my spouse recently changed her TSP contribution because her friend told her to. She's currently has in the L2030 fund 80%, C fund 10%, S fund 10%, and we retire within 4 years. Would you agree that in her best interest to go to G fund 70%, C fund 20%, S fund 10%? I'm not a novice in the market, but the L2030 already contributes into both the C and S funds. You know, that is a great question and kind of one we get a lot that's going to be there. How should you use your TSP? Now, I think a lot of people use the TSP slightly incorrectly, or they're looking at it, I should say, with the wrong lens. The lens isn't just retirement. It's all your life in retirement, right? So when we invest, we have some general rules of thumb that we should be thinking about. One that I really like is that any money you need to spend, any money you need to take out in the next 3 to 5 years does not belong in the stock market. Why? 2008, 9, 10, 11, 12, 13. Took about 5 years to get back to even after 2008 happened. And we all remember that. We remember that feeling as far, the joke was your 401k was now a 201k, right? Your TSP was cut in half in that period in time. It was very volatile. People were scared in what was gonna happen. We could go back to different market corrections. We've had several since then, believe it or not. And it's not just been straight since 2008, an up market. We've had a lot of volatility in this period in time. So what's your best plan for retirement? And there's a couple things you need to do. Number one, you need to have a plan. You need to remove emotion from this decision. And this is what kills investors so often that's there. Now, I can't give any advice directly to you. I don't know you in your situation. So I can't tell you what allocation you need to have. We're gonna go through the tools and tips and some of the thought processes that I have with clients on how to build that allocation. And number one is a plan. What I wanna see when I'm working with my clients is I'm a big bucket guy. I like kind of buckets of money that's gonna be there. So let's not worry about TSP or IRA or anything right now. Let's just kind of look in general. If we look at all of the investment monies that you have, one of the things that I want to see, Rudy, as you're getting close to retirement, is I want to see a cash bucket. Whether this is cash, G fund, CDs, we can have a little bit of wiggle room, but basically I want something that's not gonna go down in value is really what I'm focused on here. And I wanna see any money that you need to spend in the next 3 to 5 years in that bucket. So when you retire, how much money do you wanna spend? Then, how much are you gonna get from your pension? How much are you gonna get from Social Security, right? Those are called fixed retirement incomes. So we have how much do we wanna spend? We have our fixed retirement income. What's that gap that's gonna be there? That's how much you're gonna need to be able to pull out of this account, is you need to fill in that gap in your monthly spending. How much is that? And I want that much money in cash for the next 3 to 5 years. Why do I keep saying this? Again, when the markets go down, not if, when the markets go down, one of the worst things you could do is sell in a down market, because not only are you selling when it goes down, but when do you get back in? It becomes really challenging. Then we have another bucket, which is growth. In growth, kind of goes like this, right? Goes up, goes down, it's volatile, all of these types of things. Just an example that's gonna be there. And this is the CS&I funds, right? There's nothing wrong with those. There's just kind of how they work. They're invested in the market. They go up, they go down on a daily basis. This is long-term money. This is the reason we have a cash account. For your distributions, that much money needs to be kind of in cash that's gonna be there. Then in addition to a growth account, we have an income account. And the income account is kind of more slow and steady, growth a little bit more time over this. Now, how should you be allocated between this? Man, that's a great question, and it really depends on this. How much money do you need to take out a month? kind of dictate how much needs to be here, then how much goes into these other buckets. So when you're looking at this, you gotta have a plan. How much money am I gonna need to take out in the next 3 to 5 years? We need to have that focused for that money is available. Any future money, keep in mind that you're gonna be retired for the next, hopefully 20, 30, 40 years in retirement. You maybe don't want to take all of your money out and stick it in the G fund. Maybe it's right for you, but for the majority of people, it's probably not, because you need growth. Your pension will not keep up with inflation. Your first pension is intentionally designed to be 1% less than inflation. It's not going to keep up. Social Security is not going to keep up with inflation. What is the tool that you have to keep up with inflation? Your TSP, that growth tool, your IRAs, your 401ks, your outside investments, right? That's what has to outpace inflation, and it's gonna do it in these accounts that are gonna be there. So we need to blend, we need that diversification, as we like to call it, from financial advisors. So we need a little bit that's gonna be in cash for money you need to spend. The rest of the money, you should be looking long-term in it. Now, we put on a course a couple times a year called the 3 Critical Concepts. You can find more information on our website about this. And in that, I'm gonna go through these concepts and a lot more in depth in kind of how this one works and how we look at it with clients, and probably some things that you should be thinking about. So Rudy, I hope that answers your questions, gives you a little bit of ideas on at least how to approach your asset allocation. If you have a question like this that you would like submitted, then scroll down to the bottom and fill it out for us. Submit it to us so you could potentially be featured in the first federal fact check. Or maybe you have a little bit more complicated question. You want to know how to plan for your retirement. Well, that's what we do. We specialize in working one-on-one with federal employees to help plan their retirement. So you can request a consultation, you can visit with myself or a member of our team so you can get on that right track to your retirement. Until next time, happy planning.